I just have one question. Sorry, my folks always taught me when you speak to an audience, you always introduce yourself. I'm Wayne Pochenpoel. I sit on the audit committee for one of the clusters of Gauteng Provincial Treasury. Now, there was much debate about the buzzword value add. Now, as we know, value add means different things to different people, depending on where you sit. And now, for an audit committee to get to conceptualize the word value add, taking cognizance, management's responsibilities, internal audit, external audit, as well as other assurance providers, is there perhaps a best way to define this concept?
Okay, thank you. And we've got a question from the lady 6 rows down the line. And indeed, if you may, please introduce yourself.
Good morning, everybody. My name is Mpomusweu. I just have 2 questions. The first one is relating to the audit report, in terms of the suggestion that it should only cover the listed environment. And I'm sitting here asking myself that, seeing that as a country we want to also grow the governance of unlisted small entities, why is that the suggestion only limits to the listed environment? And secondly, regarding the suggested matters that needs to be covered in the audit report, I'm still not clear what is the issue that is being raised. Is it the issues that are being raised, are they being looked at from the point of the auditors, that there is a risk that the auditors would be facing when they put these key matters in the report? Or is the issue being the fact that there are benefits that the suggestion is bringing forth? Because from my point of view, I'm saying that the auditors are doing the work anyway. They are identifying these audit matters. It's just a matter of how do you then put them down into that report to make sure that they are covering what they have done. But I'm still not clear what is the issue regarding the matters that are being suggested in the report. Thank you.
Okay, thank you. There was one more question on this side. Then I can move. The next round will be on my left. There's a question from the gentleman here.
Thank you. My name is Pila. I just have one question to the panel, especially
Pila from where?
Pila from the Civil Aviation Authority.
Thanks.
I'm actually the Chief Audit Executive. The question that I basically have is mainly regarding the issue of independence, which has been highly emphasized this morning. And what comes into my mind, how do you define the independence, especially with the issue that the auditor is being paid? I like it from the Auditor General's perspective, because AJ is an independent body. You know, when they express their opinion, it's quite clear there. But from a private sector, where you've got an auditor, a firm has been appointed to audit the organization, and the fees are being paid by the same organization, that I'm expected to express an opinion. You know, and it's quite a challenge, especially, I mean, you know the incidences of Enron, the Welcome, and Parmalat, and so on and so forth. So how do we deal with the issue of independence, especially if we are paid the fees by the company?
Okay, thank you. I'll now look towards my panel to assist with the questions. The first one from the gentleman in front on the reporting of competitive information. Tsakani, thanks.
Portfolio at the Office of the Auditor General are some of the Schedule 2 public entities which have competitors in the private space as well. And this issue of to what extent do we provide transparency on some of the aspects that we want to report on, and to what extent do we protect the confidential information of that particular entity. We've dealt with this, and a compromise that seemed to work was for us, instead of including the information in the public document that is the audit report, it was rather to use the audit committee briefing document as an instrument to actually communicate the auditor views and auditor judgments on some of the confidential information. So I hope that can help.
No, thanks. The value add, somehow I think Mitesh, Bernard, please, if sure.
Independence perspective and our code of ethics, the auditor confidentiality will always override the disclosure of information. You must also remember that the information that the auditor discloses in the key audit matters are not new information. It's information that's in the financial statements already. The first responsibility to disclose information is with the directors. So the auditor will not disclose information that's not in the audit report. If there's in the financial statements. If there's information that's not in the financial statements and should be there, then the auditor will qualify his opinion or modify his opinion accordingly. So the key audit matters should not be seen as new matters. It is matters either that are already in the financial statements. And I know some management is a little bit concerned. It's not only the auditors that have to disclose additional information, it's the auditors reporting on information disclosed by management. And I think management also sometimes feel a little bit uncomfortable with what they have to disclose so that the auditor can report on that in the key audit matter. And the second criterion that we have to remember is that it really deals more with the auditor's process. So the auditor's process, I think, especially where professional judgment was applied, is not really something that relates to the confidentiality of the client. It's more about the processes of the auditor. Thanks.
Okay, thanks. Mitesh, the value-added services, from what do you see that entailing? To address the second question, from an auditor's point of view.
Thanks. It's definitely highlighted every audit committee, the value adds. But I think for us, what we see it as, or what we should be seeing it as, there must be a fine line between giving value add and the non-audit services that we've been speaking about, and the line between independence and the non-audit services. However, we find that a lot of audit committees are pressing us on the value add towards keeping them updated in the regulated environment, knowing where we are, all the changes that are being made constantly within what we've just been speaking about now and what's coming, is saying to us as the assurance provider to us, please let us know what's coming, how do you apply it, and then assisting us in possible implementation without affecting your independence or creating a service out of that value add. So I think from our perspective, we are very sensitive of that. We do take cognizance of that in our reporting structures to the audit committee. And what we try to allude to more in the value add is to ensure that we assist the audit committee in assisting us getting our opinion out there in the right format and without any resistance or challenge.
Thanks. Linda, I think I'll give Paul's question, Paul Msewu, the audit report covering only the listed entities, and I think she had two questions, and then the one around the key audit matters.
Okay. Thank you very much. And regarding the listed entities, that's a very good question, because there was a lot of debate internationally as to whether it should cover all entities or not. I do think it's just a stepping stone or a phased approach. Initially, I think maybe for two reasons. The one is that there was quite a lot of concern still raised by the smaller entities and the auditors of small entities to say, We don't understand yet what the impact of these changes on the audit report will be for entities. Will it result in audit fees going up and all sorts of things like that? So maybe first just test it in the listed entity market. There was a whole debate around public interest entities, but the issue has been that nobody has really been able to clarify the definition of what's a public interest entity, where if the cut is much more clear if it's listed, non-listed. But having said that, I really do think it's a stepping stone, and ultimately it would roll down to smaller entities as well, because I agree with you. I think sometimes with smaller entities, there is, speaking of value add, there is probably a lot of value that a more comprehensive audit report can add, and more comfort that a more comprehensive audit report can do. So it will probably a matter of, this process of this matter being out for a number of years and then reassessing how it should be rolled out to other entities. Then and just on the second one, if I may, just on the key audit matters and what is the issue, yeah, I think it is a good question. I think there are probably two things. The one is how to capture it and how to define it. And Bernard, you raised that point, to make sure that auditors report information relating to the audit, not the company information, and it touches on that first question of confidentiality as well. How can the standard appropriately define it, that the audit gives more insight into the audit? But we have a very clear message from investors that frankly we don't really care what your audit procedures were. So don't give us a key audit matter where you give us a page of audit procedures, which is almost the easy way out. We will tell you what we've done on this difficult issue, and I think it will take some experience that we're going to have to build up over time. Also for auditors to write it in such a way that it actually is useful for investors, that it's focused not on the input of what you've done, but on the output of what's your conclusion. So are you happy that the company didn't do an impairment? That's really what we want to know as an investor. Auditors are saying, but you're making us give lots of little audit opinions. So now I'm giving an audit opinion on goodwill, or I'm giving an audit opinion on the valuation. So it's to find that middle way where it's written in a way that it's not lots of little audit opinions, but that it is still useful. It just reminds me of 4, 5, 6 years ago, we started debating about companies disclosing risks. And everybody said, this is crazy, we're going to give away our competitive advantage. Every company that's listed now is doing quite significant risk disclosure. And I think it's that change management curve that we're going to have to go through as well with all of that.
No, thanks, Linda. And the last question from this side, from Pilar. Can you bite the hand that feeds you, basically? Thanks, Prof.
I understand the concern that it is a fact that the company pays the fees. But and of course, company means the chief executive, the CFO finally signed the check. But really, the approval is not done by the executives of the company. If the audit committee is fulfilling its role, it should really be a matter for the audit committee to approve and instruct the company to pay. So really, one must guard against a situation where the CFO is allowed to actually be the most decisive person in terms of deciding the audit fees. If that kind of thing is allowed, then this concern of yours will be very, very serious. But I thought the Companies Act now is clear on this, and really, it really tries to address the concern that you have addressed. I would say that the fact that approval is not by the company, it's by the audit committee, and that is final. There shouldn't be a saying that it's recommending to management. No, it's approved by the audit committee. And the audit committee is supposed to be composed of only independent directors. If they exercise their independence, this concern should be alleviated. Thank you.
Thank you, Prof.